Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets and the markets related to the metals. And without further ado, Miles, the volatility continues. Has anything changed in terms of the technical analysis on gold this week, in your opinion?
Volatility? How volatile can something be if it only goes one direction? So, no, you're absolutely right. And the aggressiveness that we've seen across the board. So that certainly has been volatile because we're looking at gold now up from around 1625? How low were we a week or so ago?
A couple weeks, 1625 to...
Up to 1780, 1785. I think 1787 is where we topped out. So incredibly aggressive moves up in gold, silver, platinum. We had a strong move down in the dollar and a nice little bounce in the equities market. So I figured on this, since we've had such aggression, things are so overbought, so oversold in such a short period of time, I want to take a minute, just kind of look at, okay, what are some of the support and resistance levels we have now going forward? Is gold in a bull market? Is the US dollar in a bear market? And what do we need to see happen there to start arguing things maybe have changed?
That's right. People have been asking us for months, when is gold going to start going back up? You know, when is this downward trend going to pause and reverse? And we've been saying, hey, when the dollar actually starts to turn down. And boy, the last month or so has been a real example of that. And I know you're going to dive deep into the currency, but when the dollar moves down from almost 116 to 106, that's exactly what we're looking for in terms of that impact on the gold price, because that's down almost 9% in that period of time. And that corresponds with gold up almost 9% from the lows that we set just a couple months ago.
So let's take a look at gold first. So gold did put in a nice shorter-term higher high. We got above the October highs, and we did break back into that longer-term trading range. You know, we had this extended floor at around 1680. We broke below it back in September, and now we've started to stair step up. We talked about this triple bottom about a week ago on last week's show. So we have extended above the October highs. We've done it very aggressively. Gold is very overbought right now in the short term. And we're coming right into the August highs, which I think is going to be the first real testament of gold. So I think I mentioned this last week. I want to see gold over 1800. So we want to see gold above that 1800 mark, which is going to be the first major higher high that we would see in gold during this extended move down since we had starting back in March. Now, I think there's a good chance we're actually going to see gold turn down here, even though we haven't broken above it yet. I think there's a good chance just because of how aggressive the movement up has been over the last couple weeks. We're going to see gold turn down. I would put our support levels at around 1720, 1700, and then of course that long-term bottom at 1680. That's your 382 50% line and then the 618 fib respectively down the line. So personally, I'd like to see gold kind of see some resistance here at this 1800 or just below 1800 mark, take a little bit of a breather, build up some momentum, and then keep pushing up from there and hopefully push up through it on the next pass. Now, the other argument would be, in order to shake out some of this overbought sentiment, just sit here. Just sit right here, up or down $10 for the next 2 weeks.
Maybe to the end of the year. Who knows?
Maybe to the end of the year. But if we see gold just sit here short term, that's going to shake out that overbought sentiment too. And what that does is that's going to pull some of the indicators like the relative strength index, which I like, RSI. That's going to pull the MACD, the moving average, convergence, divergence. That's going to pull your longer term averages up to that level and kind of let things calm down here. That would be an incredibly bullish sentiment for gold. So a correction back down here is very common. It'd be very likely to see that over the next couple weeks. That's most likely what we're going to see happen. But if we see gold sit here and not do anything, especially to the downside, not have a pullback, that's incredibly bullish. And I think once you break above 1800, I wouldn't even look for a pullback then. I'd call this a breakout move bullish. And I think then you're starting to look at significantly higher prices. I think you're retesting the old high, 2100, and then going on from there. And that's something we could see play out maybe even in the next 2 or 3 months total. Surprise, surprise, when do we tend to put in highs in gold? around January or February.
Yep, and lows precede that. So you can see quite a swing if you get another December low, which tends to be the norm seasonally, then you could really see it take off. And we've seen it take off already from the previous low twice back in September and October, silver bottoming out. Let's transition over to silver here in a little bit, but it's up 26% from those lows that we put in. Silver is. Gold's only up 12.5% here in the short term from those lows. So what that's done too is it's brought that gold silver ratio down like we mentioned last week. But that's a huge swing in silver. Are you buying it yet? Anything changed in terms of breakout and new channels with silver?
So the big difference between gold and silver is, like you said, is we're putting those consecutive lows in. Because, when we talked about gold, we had a triple bottom. When you talk about silver, you have a triple bottom, but it's a rising bottom. Each low has been consecutively higher than the last, and each high has also been higher than the last. So we're building this nice rising channel in silver. On top of that, silver has now also broken back above its 2-year market floor. So where gold had a market floor at around 1680 that it held up until earlier this year, silver had a market floor at around 2150 or just below that, and we've actually now pushed back above that. So it looks like silver might actually be catching up with gold here as far as the trading charting goes. But you're correct. I mean, silver being a more volatile metal, even though it's somewhat lagging behind gold, and like we've talked about with the gold-silver ratio, the ratio went from the 50s back into the 80s and 90s. So silver, while the percentage swings are higher, it has been lagging behind gold, and it looks like it may be starting to catch back up. So with silver, I would say we got right to where its May and June highs were, which are the numbers that you want to get above. So that's around $22, a little over 22. I'd like to see silver get up to around 22.80. I think that's where you're going to see the next major resistance point on silver. And then finally about 24.20 is probably your next major resistance point on silver. So I think there's a good chance, even though silver, like gold, may have a little bit of a pullback here, I think silver stays in its rising channel, and I think those two numbers are very likely over the next few weeks or months.
Yeah, it's been fun to watch, and it's been encouraging for the investor. We've been putting a lot of people into silver as that ratio climbed, and so to be rewarded in the short term is good. Platinum, same way. You've been very bullish on platinum, and we've seen identical percentage increases in the other white metal, platinum, that we're recommending. So it's also up 25, almost 26% in that same period of time. A low in the low 800s, high we finally here crossed into the 1,040-ish range. So are you changing anything with your platinum outlook?
No, I mean, I've been bullish on platinum for a couple weeks now, and I think it's pretty clear at this point that platinum has actually turned at least short-term bullish. I think we're looking into the 1100s probably before we see any major type of correction back down. If I had to draw the perfect chart, it would take us up to around 1120, then a big correction, maybe all the way back down to like 925. A pretty significant correction, because again, we're talking about starting at 800. So going from 800 to over 1100 is a significant move just since September. So some type of solid 50%-ish correction back down. I think around 925 for me on the chart would look like a good correction level, and then take off from there and eventually get above the early 2022 high at around 1200. So we are looking at some pretty long-term fib levels here. With gold, with silver, we're looking at more short-term stuff, but platinum has already broken out of all of its short-term stuff. So now we've got to zoom the chart out a little bit and look at where some of the longer term levels, support and resistance levels may be. So 1120 and 1200, and I think a pretty significant correction in between us hitting those two prices.
Yeah, good healthy price action, and an example of why we diversify our IRA accounts in not only gold but into some of the white metals because of this type of a window. There will be times that the white metals outperform, and there will be times that the white metals underperform, and that's where the ratio trading comes into play, but it's also where you're rewarded in nominal value in those accounts. So anything to mention on palladium, or are you too excited to jump into the dollar?
No, I'm pretty excited to get into the dollar. Not palladium, because palladium, we still feel, while it may not be overpriced in terms of dollars or in terms of, say, what's going on in Eastern Europe and one of the largest producers of palladium, Russia, and things like sanctions. No, I'm not saying I'm not interested in palladium. I'm less interested in palladium than I would be in a comparative metal like platinum, where I think the opportunity, because of what you just said, right? The
We're
idea
looking for the value.
Yeah, the value and the long-term ratio and pricing differences and all. So I'm just more interested in platinum. And you see the volatility. I love that you bring this up. I mean, the white metals, platinum, silver, over 20, 25% up. Gold's only 12. So there's a good chance that in these more volatile metals, as prices are rising, you might see those ratios get back to their averages, which has been a core component of the McIlvaney strategy as far as investing in metals goes. So I do want to mention the equities market, because the equities market has had a nice bounce. I would continue to argue.
Bounce. It's like in for one of the best months in history, I think. So go ahead.
I'd
At least
argue,
in the Chinese indices. So go ahead.
Short term, okay. So short term, the NASDAQ, you've got 2 consecutive higher lows. You've got 2 consecutive higher highs. But if you look at the long-term chart, we're still so far away from doing anything that confirms bullish. S&P has to get to 4,300 just to say it's possible. So you have so far to go on the S&P, and you're still down exorbitantly for the year, even if we did get to like 4,300 again.
Well, so much of it was speculative, right, Miles? It was on hopes that they would slow down their rate hike increases in terms of the pace and maybe the percentages. Okay, great. So you get a little bit, call it a dead cat bounce or a market reaction to that. But every other market indicator from an economic standpoint is worsening. And so as these worsening economic indicators continue to pile in, housing and payroll and jobs, and in terms of the number of layoffs that we're seeing, you've also got household debt surging now the most since 2008, despite those rates being higher. And all of this is occurring without the Federal Reserve yet reducing its balance sheet. It's still talking about reducing its balance sheet. It's going to. It's going to have to come down a couple $1 trillion. So on top of a recession with a Fed balance sheet reduction, I don't buy this equities market rally. It's not based on healthy fundamentals.
No, completely agree. I think this is a trader's rally.
There you go.
And that's it. And you talk about dead cat bounces. I mean, the equities market has had 2 significant and now 4 total dead cat bounces just this year. And the 2 significant dead cat bounces keep putting in lower highs and keep putting in lower lows. So, no, I don't see a rally here. It also doesn't help anybody that thus far Jerome Powell has stuck to his guns. And not only has he thus far stuck to his guns, he's made every indication he has no intention of, changing ships midstream. In fact, to the point where we mentioned this last week in the show, people are no longer investing in any sense of reality. They're investing in the hope of what one guy at the Fed Reserve might say 6 months from now. It's not even about what the interest rates are today. It's about what's he going to do 6 months from now. And he's doing everything he can, I feel, to tell people not only are we raising interest rates now, we're going to raise them again and probably again, and we're going to keep doing it until real rates are back above zero.
It's easy for you and I to talk this way too. That's not a market that we're putting our clients' money into, right? But hedge funds are getting caught on the wrong side of the fence with these dead cat bounces or these trader rallies, as you call it. That's causing a forced unwinding of many hedge funds because they're short. And here you get a 15, sometimes 30% move against those short positions. Guess what? Forced unwinding of many, many hedge funds. There's a lot of money disappearing.
Yeah. And there's a really good way to get those rates back above zero is not only do you raise interest rates, but you have to do the other side of the coin, which is what you're talking about, and that's lower government spending. So do we see a tightening? I don't know.
Well, it depends on the control of the House. I think that could bring some balance. It's a technicality. The GOP has taken over control of the House at least, and so there will be more controlled spending is the theory, at least a more focused spending on things that can be agreed upon from both sides of the aisle. that'll be interesting to see how that plays out. In the meantime, it's not just the equities markets. I mean, the crypto markets with their unwinding and the volatility that we're seeing there. If anybody needs to hear one more time, crypto's not gold, just go look at the loss of billions and billions of dollars overnight that essentially never existed.
Right. Well, and the crypto market also has one of the biggest Madoff-esque Ponzi scheme events taking place right now between the FTX and the potential buyout by Binance, which was one of the more interesting stories I've read in the news over this past weekend, and kind of going through some of that stuff since
we've been here.
Yeah,
I mean,
since we've been here. Yeah, this is like Lehman Brothers and Enron all over again.
Combined.
Yeah.
Yeah.
So that's, if you
right.
haven't looked into that, if you're not a crypto person like I'm not, it's still worth looking into what's happened over the last couple weeks. So since everything does revolve around the dollar, let's take a look at it.
Finally.
Yeah, because we had another interest rate hike. So as you and I both know, that means the dollar index got stronger, right? Isn't that what happened?
That's what should happen.
Isn't that what we think happened? So here's another trader's decline. Dollar significantly overbought. I mean, significant growth since May of last year. 18 straight months of growth. It's not surprising to see it have a turnaround here. So coming off that high at around 114.7, we came all the way down to 105.25. Little bit of a bounce over the last day or so, but we are at the first potential correction level. So we have had a 382 fib correction here. Not only that, we've come down to the bottom of what could be a left shoulder in a potential head and shoulders pattern, which we put in back in July and August at this 105 level. So again, like I did with some of the metals, where I say if I could draw out the perfect chart going into the future, what I would like to see is the dollar trickle its way down to around 102, have a significant correction back up, stop at around 109.5, build a very solid, almost perfect head and shoulders pattern, and then deep dive from there. I think something like that could certainly be possible. So the real test for the dollar really isn't how low does it go on this move, because this is a reactionary move. This is a sell-off, probably a trader's move. So I don't really care how low the dollar goes over the next week or two if it continues going down. What I want to know is how high does it get on the bounce back up?
Yes, I hope that we see it, because I hope it coincides to your gold target price of around 1680. If we could see that dollar index bounce back up to 109 and gold come down to 1680, I will scream on this show to double your ounces.
It would be one of the most beautifully correlated charts I'll have ever seen in my life, and that's why it probably only exists in my head. So, but we'll see. We'll see how close to accurate I am over the next, let's say, 4 to 6 weeks.
Well, continue to add to your ounces over time. People ask, when should I buy? You should buy always and often.
I buy every 2 weeks.
There you go.
That's what Volted's for.
That's right. So if you're doing that on a consistent basis, you're cost averaging in and you're not so focused on price. If you're waiting for some major event, well, you've heard some of our entry points here, but let me just remind you, here's Klaus Schwab from the G20, regarding the Great Reset. There's deep systemic restructuring of our world, and this will take some time. And the world will look differently after we have gone through this transition process. What's he doing at the G20, first of all? Second of all, that's why you own gold.
So that's going to do it this week for Golden Rule Radio. As always, we appreciate you stopping by. If you liked what you heard, do the YouTube button pushing thing. Better yet, if you liked what you heard and you want to discuss your personal precious metals portfolio with Tori, myself, or anyone else here at McIlvaney ICA, make sure to give us a call. We can be reached at 800-525-9556. You can find us on our website at McIlvaney.com. We're on Facebook at McIlvaney Financial or Twitter at ICA Gold. And as we move into the holiday week next week, we will be taking the week off the show, so we hope you have a wonderful Thanksgiving, and we'll talk to you after the holiday. Thanks for listening and have a great week.